The reality is, because of government regulation and COVID-19, majority of people stayed at home last year, and that led them to rethink some of their life decisions, life choices, and how to move forward with their lives. And that's why we saw a huge boom in retail investors, meaning people like me and you who are just the average investors without huge funds or huge investment corporation or billions of rand. Normal everyday South Africans getting into investments. As much as that is good, majority of them made huge mistakes. And on today's video, I'm detailing the top 5 mistakes which beginners in the investment world have made or are making, still making to this day, and also making few suggestions on how we can fix those mistakes. As always, guys, please do ensure to subscribe to my YouTube channel, click on the notification bell, and like this video. Let's get into it. Hello future millionaires and billionaires, and welcome to an insightful and informative video right here on my YouTube channel. For those who are new to my channel, my name is Ivan Sambo, and on my channel I'm dedicated on simplifying the world of investing, saving, budgeting, so that the average South African on the street can be able to understand them and be able to use that 1,500 rand per month or that 4,000 rand per month is earning in order to ensure he can keep on supporting his family and take a little bit of it and be able to invest in his future. That's the aim of my YouTube channel, to simplify the world of money basically. If you're new here, please do ensure to subscribe to my channel. But as always, guys, I must put disclaimer that I am not a financially registered advisor. None of my videos constitute as financial advice, but they are only for educational purposes. So let's get into this video. 5 mistakes which are made by beginners in the investment world. The first mistake which majority of people do is to wait for the perfect time to start investing. I had a conversation last year with one of my classmates who said he's waiting for the market to reach an all-time low because of COVID-19 so that he can start investing into the Johannesburg stock market, so that when the market recovers, he can make huge amounts of money. That was him, waiting for the market to hit an all-time low. There's no such thing as that. Yes, there is a time when the market can hit an all-time low, but the thing is that we will know that that was an all-time low when we are looking from a point of time, when we are looking to now and we say, oh yes, last year the market reached an all-time low at that state. But while you are living it, you will never know that this is an all-time low. Because for example, the market can go down by 15%, go down by 20%. You think, okay, 20% all-time low, and you buy in there and keeps on going down. Or you can say, okay, I'm waiting for it to reach 20%, that will be an all-time low, and the market reach 15% and goes back up. You can never know when and actually it is all-time low or it's a perfect time to buy low in a particular stock. So there's no such thing as a perfect time to buy. Just buy when, like right now, buy right now. Stop waiting for an all-time low. Stop chasing the perfect time to buy into it. As much as I agree, it's good to buy low and sell high when you go into investments. I agree with you, that's good. But waiting for the perfect time, there's no such thing as a perfect time. Start investing now. People of demo accounts, like literally, I know someone who made so much money on a demo account, but when it was time for him to actually start investing, the market has already recovered. Because you spend so much time on demo account, you spend so much time on waiting for the perfect time to buy that it misses you. The perfect time is always today to start investing, guys. Please, mistake number 1 is waiting for the perfect time. Do not wait for the perfect time. Start investing now. Second mistake majority of beginners when they start investing they do is that they put a large amount of money at once into their investment. Guys, the thing is, the market is versatile. The market goes up and down every single day. Literally. And when you're a first-time investor, that will scare you. That will make you have do a panic buy or panic sell based on that the market is going up today and down tomorrow. But if you're a first-time beginner, that's what the thing's gonna happen. You will get nervous based on the market and how it performs on a day or weekly basis. So it's always good if you're starting up to start small so that you can get built in and get to know how actually the market is while putting in a small amount of money. I know in my previous first point I said start now with small amounts and build your way up. Start now putting that 50 rand and go up 50 rand, go to 100 rand, 300 rand, 500 rand, 1,000 rand. Like, go slowly and grow up, because the thing, if you put a huge amount of money at once, you will get nervous, because for example that may be your life savings, that may be your payout from whatever thing may be, and you get nervous and you're a first time beginner, meaning you'll make a lot of mistakes. So it's good to start small and learn along the way, and once you learn along the way, you put amount of money and you increase it as you go along. The third mistake that majority of beginners in the investment world make is that they invest without having an emergency savings account. Really is important in order to protect yourself and your investments that you have an emergency savings account. Those who know me and follow me on Twitter, they know that my biggest passion is to also advocate for an emergency savings account, because that thing is a lifesaver. If you're starting investing and you are into this and you put money inside, and for example something like 2020 happen again and you face an emergency, maybe you get retrenched or you lose your business, you will have to take your investment out, because you have no source of income. Your investment is the only thing that's left for you. But if you build up an emergency savings account for yourself, whatever emergency pop up, you use your emergency savings account instead of using your investment, because your investment has a plan. Your investment is here for the next 10 years, the next 20 years. You're investing in a long-term view, not in short term. So you don't need to disturb your investment. Because remember guys, if you, for example, you invest into shares, you buy into Shoprite shares while they were selling at, let's take example, at 20 rand. Then 7 months into it, an emergency pop up and you buy you remove your investment while the Shoprite shares are now sitting at 15 rand. So sitting at 50 rand. Then you come back again and you want to buy back into Shoprite. Now Shoprite per shares is at 100 rand. See, that's the thing. You make a loss. You basically you have lost an opportunity. That's why if you have an emergency savings account, you take your money from your emergency savings account and you leave your investment out of it. That's the beauty of it. That's the mistake a lot of beginners do. They go into investment world without having emergency savings account. And the only way to fix that is by having one. And you need to ensure that you have up to a minimum of 3 months expenses covered in your emergency savings account. And don't rush to build this like quick. Take your time. Save every single month 10% of your earning or your income, whatever percentage that works with you. Save it little bit by little bit. Over time, we'll be able to cover you for a period of up to 3 months of expenses in your emergency savings account. So always have it when you are in the investment game. The fourth mistake that majority of beginners in the investment world make is that they invest based on what is trending, not based on their own research and understanding. Guys, let me say this. Please listen to me carefully. The second an investment asset or investment platform is trending, for a second that a stock is trending, is too late to buy into it. Too late. The second is trending means it already has hit its height. It has hit its peak. The second is trending. Because when it was low, no one was talking about it. When it is high, everyone is talking about it. But those who bought while it was low are now making noise about it and bragging about it. And when you buy and you buy at its peak when it's trending, you will make a loss. Let me make an example. In America, a few weeks back, there was a huge trending stock called GameStop, whatever they call it. It was trending. Everyone was talking about it. Someone, a security guard in America, withdraw his life saving to put into the stock. The stock was trending because of traders, not because of investors or investing tools for long term. No, because of people who love gambling with stocks. People are trading them every single day. Buy now, they sell the next few seconds. That was the reason. That was the reason it was trending. This guy took out his life saving, put into this GameStop shares, and now these shares have dropped by up to 80%. This security guard has lost 80% of his life saving because he invested into something, number one, he doesn't know, doesn't understand, never heard of it before, just because Twitter is making noise about it, the news is making noise about it, and then he bought into it and he made a loss. Never buy into something because it's trending. The second is trending, it means it already has hit its peak. Yes, sometimes when something is trending, it can be good. You can make a win into it. I know a friend of mine last year bought into Sasol when everyone was making noise about Sasol, bought into it, made huge amount of money for himself. But that's one in a million type of vibe. And also at the same time, you must be able to do your own research about the company. Why is it trending? What does it do? Will it survive in the next 15 years? Is it a good investment for long term? Wow, what is it operating in? Understand. Like even if something is trending, don't just buy into it because of that. Understand it, do your research, do your understanding, guys. The last mistake a lot of beginners do is that when they start investing and they start getting dividends, they think dividends is money to be enjoyed. Literally, they think dividends is money to be enjoyed, especially for young people in my age, in their early 20s, young people in their late 20s, early 30s, late 40s. Guys, let's make it clear. In our age group, in our situation, when we are investing for long term, there's no good reason to take out dividends and enjoy them. Even if they pay out that 20 rand dividends, that 10 rand dividends, for those who are making a lot of money, I'm paying out 300 dividends or 1,000 rand of dividends, whatever the case may be. Dividends must be reinvested so you can create compounded interest on your shares, on your investment asset. Like, guys, please, I cannot emphasize this enough. Ensure that you reinvest your dividends. And also, for those who don't understand what dividends are, dividends basically is the portion of the company's profit that is paid out to you as directors of those, or so not directors, sorry, as shareholders of that company. So for example, if I invest into a Standard Bank and Standard Bank would pay out dividends, I mean they'll give me a portion of their profit and of their gain. If, for example, if they made whatever profit they made and I own one share of Standard Bank, and Standard Bank will say for each share that you own will give you 10% as dividends. Meaning if I own 100 rand worth of share and my share I own that one share is 100 rand, value of 100 rand, they will give me 10% of that as dividends and give it to me and say, okay, there's 10 rand is dividends and I can do whatever I want with it. So for me, as a smart investor, I will reinvest that dividend, that 10 rand back to Standard Bank. I'll buy more Standard Bank with the money they are giving me. So that's the one thing we need to do as beginners or in the investment world, reinvest our dividends. But as always, guys, I am Ivan Sambo, your student investor, and thank you so much for watching.